we have a panel to talk about something I think is very critical for the growth of Bitcoin. As I like to say in speeches, it's time for Bitcoin to grow up. And that includes creating an environment where financial institutions and traditional financial investors feel comfortable operating, investing, or supporting Bitcoin, because that will actually really help it grow and take Bitcoin to a much higher level. So far, a lot of the traditional financial institutions have been wary or cautious about getting involved with Bitcoin or other cryptocurrencies, and I think we need to figure out how to solve that so that they're more comfortable and we can achieve adoption by financial institutions. Joining me to discuss this are three great leaders in the space. First, from South Africa, he is the other co-founder of CentB. Please welcome Angus Brown. Next, he's from here in Toronto, but he's moved to London to do what I used to have to do, be CEO of nChain. Please welcome David Washburn. And another local, he was CEO and co-founder of Front Financial. Please give it up for Stefan Ouellette. Now, all three of these gentlemen come from what I would call sort of more traditional financial or financial institution backgrounds. I wanted to first start by asking each of you to just give the audience just a quick overview of who you are in terms of your experience coming into the Bitcoin world. Angus.
Thanks, Jimmy. Great to be here, everybody. My background is about 20 years of banking, and that comes out of even starting banking in the world's first bank-backed digital currency in 2000. So I've been in retail banking and had quite a lot of experience in launching digital financial products, including neobanks, challenger banks, digital KYC businesses based down in South Africa, proudly South African, live in Johannesburg. And CentB as a business is about using Bitcoin SV to create the next payment systems, to create the next evolution in payments.
Okay, great. Now, so David, a lot of people in this room already know about nChain, of course, and it's great to be able to work with you on the future growth of Bitcoin SV. Can you tell the audience, since they're meeting you for the first time for a lot of these people, your background and what brought you into nChain?
Yeah, absolutely. Thanks, Jimmy. So I didn't quite hit the 20-year mark in financial services, but I think the clock ticked to 18 years. Primarily in the equity capital markets. Most recently, I ran the Canadian operations of a global investment bank. So through that period of time, I also had the experience of being able to turn research into money. So the institutional equity research business is really similar to some of the core foundations of what we're up to at nChain. It starts off as what might be closer to an academic exercise than dollars, and now it's about figuring out how we turn that into money. So at nChain, we've got what in my 27 days at the company, I think is literally the most advanced research team in the space in the world. So it's a tremendous starting point from my perspective to help build this business. We've also got one of the most experienced engineering teams there. So this is a really magic experience here. So looking at, from my perspective, in what I'll call old finance, we've got a really unique opportunity here.
Okay, Stefan, tell us about you and also what Front Financial does.
Thanks, Jimmy. I have a similar background to Dave. I was working on Bay Street for about 10 years. I was an equity trader at BMO Capital Markets. Eventually, I ended up running the hedge fund sales trading operation there and took on additional products like equity options and equity swaps. About 18 months ago, we founded Front Financial with the goal of targeting institutions in this space. And our particular angle is that we think a huge blocker to institutional involvement in the space, which has been minimal so far, talking traditional asset managers, has been that they have a lot of frictions with owning crypto assets themselves, whether they're legal or operational, which I'll get into a little bit later. So we've created a derivatives platform that we think removes those frictions and allows institutional investors to be involved and get exposure to the space. I'd also like to announce that we've recently that the Air Group has led a round for us, and so what that means for this room is that we're going to be having products among some, but that an institutional investor that couldn't otherwise own BSV will now be able to own a BSV derivative and get that same exposure and explain their views, such as if you were a very smart institution and a couple days ago you thought that BSV was undervalued, would you have been able to participate? So thank you, Jimmy.
Okay, great. So another great investment from Calvin Ayre and the Ayre Group for Bitcoin SV. Congratulations. And it is part of the efforts we're making with Calvin and his group to bring more support to Bitcoin SV outside of the, quote, Bitcoin world, right? Going to bigger enterprises, traditional financial institutions. So I want to ask each of you, from your background and experience, why you think it is that the traditional financial institutions and markets have been hesitant to support or adopt in some form Bitcoin, in particular other cryptocurrencies. What are the hurdles? Angus?
Okay, I'll take the first one. I think the word crypto, we're quite used to it in the crypto community. Think about it in the most ordinary person. The word crypto is a bad thing. You know, cryptos are hackers. Hackers are people who steal money from people.
Scary sounding.
So it's a scary word. It's that sort of stuff. Now, bankers, and I come from a traditional banking perspective, we don't like scary. Our job is about protecting money, keep people away from stealing money. So cowboys, crypto, scary stuff. So you've got a natural resistance, just if you look at the audience, the people in banking who would be quite nervous of approaching something like that. Then you have the regulatory framework, that you don't have a regulatory framework. So banks are used to, they have a central bank, a regulator who says, this is how you approach it, this is how you tell me what you've done, and this is how I measure what you've done. Now you've got something that isn't clear, so they will naturally be quite scared of going into that. The other thing is habit. You find that banking systems are typically been out there for 20 years or so. So bankers have been working on the same thing, which literally for the last 20 years, using the same tech with maybe a better screen in front of it, but it is the same tech, the same processes. So now you're bringing a new thing, a new process as well. So there's several different dimensions of change that you're seeing that banks are having to face.
Kind of like lawyers, really slow to change, right? Yeah, slow. Dave, what do you think?
If I can add on to what Angus was talking about, one of the big issues with any large financial institution is risk management. So trying to understand how the crypto world, Bitcoin in particular, can fit into the risk management structure is an absolutely critical component of driving adoption. So you think about a couple of components around, trading cryptocurrencies. So it's either trading for the bank's account or for the client's account. Any way you slice it, overnight, that's part of the capital configuration of the bank. The VAR models, the value at risk models, the other risk management tools go completely tilt when you input the volatility that we see on most cryptocurrencies. So they're used to dealing with much more stable, price-stable instruments, and it throws everything completely off. So it's requiring a whole new generation of risk managers and operations professionals that come into it with open eyes, and at the end of the day, new models are going to be required. The other side of the coin is about what it takes for banks and large financial institutions to use blockchain infrastructure to make their business better. And I think that's largely about education. And we're starting to cross some of those barriers now.
Yeah. The volatility point, I think, is a really good one because we all know cryptocurrency prices are volatile, mostly because it's based on speculation, let's be honest, as opposed to real utility. And I think that's why we, as leaders of the Bitcoin SV world, are so focused on not talking about price, but talking about building real usage, because my belief is you need lots of real usage to generate an actual real value that is more stable. Hopefully it continues to grow over the years, but is stable so that it actually has less volatility and makes people more comfortable using it. So it all starts with utility, not even anything else. Stefan, what are your thoughts?
Yeah, I think that volatility is a huge component of what's kept what has kept adoption in general. It's been a stunted adoption, and specifically, this was one of the reasons why we founded Front Financial, was that we thought that there were some very clear blockers to why institutions who in traditional financial markets are often there to regulate some of that volatility. They make very educated bets. They're essentially the experts in the space. If something's getting too hyped up, that creates some volatility to the upside, or something's getting dumped for no reason, it's usually the institutions that come in and support those things so they don't get to. So that you don't get those massive swings and drops. They're policing the ecosystems, for example. So I think that really investment products that are going to allow regulated investment products that are going to allow institutions to get in there and play the role that they usually play without having to set up a whole desk to trade crypto and have operations that they may not be comfortable with. I think it's really going to be this new evolution of products, and we're trying to build some of them, that allow institutions to come in, police the marketplace, reduce volatility, and grow adoption generally.
So as you know, I like to talk about building a regulation-friendly environment. And unlike other crypto camps, I think we are very open about talking about the subject of regulation. What do you all think is needed in the regulatory landscape worldwide, or in particular jurisdictions, to make it more comfortable for financial institutions to come into this market? I know, Angus, you've been talking to regulators, right, in your jurisdictions. Tell us about your experience.
Well, I think the first step is education. Given what I've said before about how they generally don't know too much about these things and haven't been exposed to it that much, so you do have to do education. And at CNP, we spend probably a third of our time educating regulators, merchants, integrators, people around us in the community about what is Bitcoin, how does it work, what does it do, and dispelling a lot of the myths. Because the myths still persist, bad news and myths carry on. So education is the first one. What I look for in return, and I ask for it quite explicitly, is say, give us clarity. Regulation means to make regular. To make regular means to make it safe, to make it comfortable, to move away from the advocates, to get to the early adopters, to get to the late adopters. You need to be able to make it comfortable, to make it safe, to make it feel that it's something that you don't have to be scared about. So that's what I look for from the regulators, specifically clarity.
Okay, Dave.
Yeah, I think education is really lacking in the regulatory bodies by and large. They don't understand the paradigm, and there's no experience to work from. So they're trying to look back in their experience with previous types of products and apply that framework, and it's not going to work. It's not the same. There are core principles that need to be applied, but it's not going to fit piece by piece. And at the end of the day, when the regulatory bodies are trying to draw on members from the participating institutions, they have a tough time. So typically, if you look at any of the composition of the regulatory bodies, there are people with 20 plus years of experience in the business. How many years of experience does anyone have in crypto and financial markets? It's not double digits.
Right. Yeah,
so there's not a lot
small.
of pool to draw from.
Stefan?
Yeah, I think that the regulators could do well in terms of really figuring out the act, as opposed to just putting blanket kind of, all this scares us and, it's problematic and we need to figure it out, to really isolate what are the issues that could be, what are the parts of the ecosystem that could really be problematic for retail investors that could be predatory, as opposed to, what the existing mentality is right now is like, we're going to regulate all of this, we haven't figured it out yet, so no one can move. For corporations that have, a small group of shareholders, why not let them experiment and be big boys, and if they end up doing something that ends up losing their shareholders' money, everyone signed on for this ride. It's a high-risk space. Let us go. So there's so many innovations out there that aren't even getting off the ground in jurisdictions like the U.S. and Canada. They're having to go elsewhere, having to jump through all these hoops, and really they're backed by some wealthy individuals or they're big boy institutions, and they're still having to fight these battles when they could be innovating.
So one of the things I have personally been doing in my role now is reviewing and commenting on draft legislation that certain countries are considering for digital asset businesses, essentially virtual currency business legislation. I want to ask you all, and so this is very top of my mind, examples of things and whether you think there needs to be specific laws or regulation about them. One, should there be more specific regulation or licensing requirements for cryptocurrency exchanges?
I think yes. I think the points at which the real currency world, fiat currency world, and the Bitcoin currency world intersect, those are points of risk. That's particularly when it comes to money laundering risk. And the FATF, the Financial Action Task Force, have written a lot of papers around that. And it also comes into where different jurisdictions intersect with each other. And those are points of risk. So they've picked that out as an area, and FATF have actually written quite a lot of position papers, including quite recently very detailed position papers, even distinguishing between custodial and non-custodial wallets.
Yep.
So our education efforts are paying up when you're actually seeing them coming through with specific things. So I absolutely see that the KYC requirements are coming through onto exchanges, and I think they're going to come on for more than just exchanges. Right. I think they're going to come into the custodial wallets as well as the exchanges as well.
And that would require, in your mind, those exchanges and custodial wallets to comply with AML as well as KYC requirements.
Yes.
And do you think that should apply also to crypto only exchanges or only crypto to fiat exchanges?
It's a good question, and I think it depends on how much risk there is. Particularly in the crypto-to-crypto space, you can say that the currency itself has left the domain of a regulator in that space. So from a domain perspective, we often look at it, that's quite safe. But there's still the ability to do money laundering across that. Sure. And I think money laundering is a real risk. I certainly have absolutely no intention of supporting any money laundering. Terrorist financing, these are things we need to combat. And we need to be actively participating, and that doesn't mean we have to follow the way the banks have done it. Sometimes the banks do things really clunkily, and having been in banks, I've done things clunkily too, but there are better ways to do it, which still achieve the same objective.
Let's go to Stefan first this time. What do you think?
Yeah, I mean, I definitely think that to your follow-up question to Angus about crypto to crypto or crypto fiat, I do think that crypto to fiat on-ramps should be a much larger concern of the regulators than crypto to crypto, and I think they probably are, and that's why people have focused so much on crypto to crypto recently, because it's easier to do.
Right.
The KYC process on crypto is very complicated. I mean, there's one side, the part that's usually regulated is the fiat leg as opposed to the actual crypto leg. Right. So, there's nothing like when an OTC desk gets crypto from a wallet, there's really not a lot of things that they can do to verify that wallet. So I think that, like Angus said, we need to be doing a whole lot to make sure that there aren't objectively illicit activities that are happening within our ecosystem. It's bad for everything. But I also think we need to think a lot about what that means right now, and hopefully there's solutions down the line that'll make this all easier for us.
Dave.
If I can hop on, it's kind of an interesting dynamic, because we talk about these businesses as exchanges, but compared to traditional financial markets, they're acting much more closely like brokers than they are exchange. So if you use an equity market, for example, the exchange doesn't face any of the customers that ever have any risk. The exchange faces professional brokers, and individuals deal with brokers. There's a layer of risk. A lot of offerings are covered under legal risk documents. They're very different scenarios. So I think the regulatory framework needs to be developed, but it needs to be developed with fresh eyes and not trying to replicate existing platforms.
Okay, what about tokens now? There's a lot of talk in different government agencies and jurisdictions about the need to either issue guidance or perhaps even new regulations or laws applicable to ICOs and other security type tokens. Do you think we need new or special laws about them, or do you think existing laws govern clearly enough?
It's I'm certainly not an expert on the token space, but CENTBI just recently provided 46 pages worth of guidance to the Reserve Bank and the National Treasury around what should be done around that space. And one of the things we were suggesting was to put a whitelist in there. Because, 2,000 odd cryptocurrencies and counting. There needs to be some mechanism. I think creating a blacklist might be a difficult way of approaching it. Perhaps creating a whitelist of those that are would be easier to manage, but at least it's something that I think we should create the concept of. There are whitelists and blacklists, and maybe there's a process to manage that. And I think securities regulators need to be protecting customers, and we must help them.
Dave?
Yeah, I think it's absolutely fundamental, especially as we move away from, in the concept of tokens, away from the ICO sort of discussion and onto tokenized assets, fractional assets. And we're getting into things that historically hadn't been able to be transacted between people. If you look at high-end fine art as an example, a lot of people talking about tokenizing art, developing marketplaces for that. I think it's a really interesting concept. It's quite seductive as an idea, and it's really interesting. The fine art market is looked at by many people as being, a almost legitimate money laundering situation. So it's the most appreciated asset out there, probably except vintage wine, and there's very little money trail. So this could actually be a really good thing if we can start to put identity, KYC onto some of these high-value assets that potentially have a bit of hair.
Right, because otherwise, wealthy person buys fine art somewhere, moves it somewhere else, sells it, and takes out the money that way. So, Stefan.
Yeah, I have a bit of a different take on this one. I'm not so concerned with ICOs themselves and needing to recreate the existing IPO framework within the ICOs. What I do think that the regulators should be very diligent in dealing with is fraud. Like, the issue is fraud. The crowdsourcing dynamic that's involved in the ICOs, I think is, very interesting and potentially the way of the future, an alternative financing route. But, the biggest issues in these things is that people took off with money that did something completely different than they hadn't done. And, how many cases are we seeing where these people are, outright accused and tried for fraud? I mean, it's rare. So, I mean, I think that almost the existing legal system, for the most part, can deal with some of these issues, but it definitely needs to be policed in a much more aggressive way than it is into looking like, what did you say you're going to do with the money? What did you end up doing?
Right.
That's not right.
Right. Yeah. My view of it, from the former lawyer's perspective, is that tokens are governed by existing laws about securities. There may be some guidance that securities agencies need to provide on how existing securities law in their jurisdiction applies in the cryptocurrency token space. But I don't think you need to run around and enact a whole new set of laws. You're just applying, like in any new technology advancement, existing law to an advancement in technology. Let's talk about tokenizing real-world assets, something that might be more comfortable for financial institutions. People talk about everything from tokenizing gold to tokenizing oil or commodities, and we support the idea of tokenizing real-world assets. Do you think that is potentially an asset class or source of investment that financial institutions would be more comfortable with?
Yeah, absolutely. From my perspective, I think tokenized real assets is going to be an explosive growth area over the next decade for sure. And there are a number of reasons, ranging from on one end of the spectrum, providing the ability for speculation on the underlying assets, and number two, having a much more real-time, low-friction risk management tool, either for truly hedging for producers or consumers on the commodity example, or from financial institutions. Ultimately, reducing the friction points in those parts of business, increase the velocity of money in the system, and ultimately that's a really, really good thing. Craig and I were talking in the back earlier about the concept of a lot of early blockchain solutions were to take out people to make efficiencies that way. I think that's a really short-sighted thing. These tokenized underlying assets ranging from currencies to commodities can allow like a rapid acceleration of capital in the financial system. It's about getting this system right, and I think the foundation's there.
Stefan, any thoughts on that?
Yeah, I think I echo what Dave says in terms of getting it right. Moving kind of from the way that assets are traditionally transacted to a completely new operational system, the way that assets are transacted. I view a bit of like a movement from the petroleum to the electric car. It's not. If the electric car is a little bit better on one component versus another component, it's probably not going to result in a huge paradigm shift to this new element that requires a complete infrastructural upgrade. Sure. It has to be better on every component. It has to be faster on settlement. It has to be just as easy on a regulatory standpoint. It has to be accessible to just as many investors. And once we get there, then it is an obvious transition that's going to happen that is going to happen down the line. But it really needs to develop to the point where it's better everywhere. Otherwise, I think it will, for a period, remain niche.
So we have a lot of people in this room who are building projects. They're developers or they're entrepreneurs. Do you have any suggestions about things the Bitcoin SV society could be building technically, or in terms of new products that would make it easier or more enticing for financial institutions to get into the Bitcoin world?
Yeah, I certainly think from a payment system, my background is really around the payment system space. There was a diagram earlier which spoke about there's the weeds of how the technology and the protocol works, and then there's the business layer above it, which is how my logistics works in a logistics business. There's that missing middle in between. And that's where I think from a Bitcoin business perspective, we need to be adding ecosystem players in here. These are people who help merchants connect into payment systems, that help logistics providers tokenize assets. There's a layer of business to business service providers here. Don't try and replace the business at the top. You've got a great protocol at the bottom that works over there. So it's business opportunities to me that sit in between, like a Bitcoin payment provider where you can provide payment services and make sure merchants get their fiat currency, but you take care of all the risk. To me, those are the ecosystem opportunities that exist now.
Okay, David?
Yeah, I think ultimately we want to make it so that we don't even notice that it's there for the entrepreneur, for the developer. It doesn't need to be a thing. It should be seamless. ability to build their business, finance their business, and integrate into as broad a financial system as humanly possible. So making those points of entry as close to seamless and unnoticeable as possible, I think is really important in getting the part of the community that wants to build something, people that aren't software engineers, people that aren't developers, but they have an idea and it can be enhanced by Bitcoin SV.
Stefan?
Yeah, I mean, from my perspective as someone who is transacting on a large basis, one of the big blockers is just how scary it is to trade cryptocurrency. I mean, and to transact in cryptocurrency. I mean, on a smaller level, but moving large sizes of cryptocurrency.
Do your clients get scared?
Yeah.
What kinds of questions do they ask?
Well, like it is freaky to put in a wallet address, and if you have the wrong number, the wrong digit there, and it happens to be that happens to be another wallet, then there's no recourse.
Right, you can't get it back.
There's no one to call. There's one of the reasons why the banking system is so incumbent is that I can call them. Worst case scenario, they can sort it all out. If someone steals from me, they'll sort it out. The credit card company will sort it out. Like these systems that just give that inherent trust layer that like I don't really need to get worried about this because I could just complain and someone will fix it. I don't have the answers to what those solutions are going to be, but that is really something that I feel like that is a benefit to the traditional financial ecosystem versus what crypto's lacking.
Any thoughts on how this group of people and those out there might be able to help improve that?
Yeah,
Well, make people more comfortable.
A system where there can be some clear recourse for if there's an error to have happened, for that to be pulled back. And I don't know if the answer for that is some kind of smart contract style system where there's additional confirmations like days later, and if one party has a legitimate claim against that, something along those lines where we can where we can start to say like I'm not completely screwed if this doesn't go the right way.
Yeah. No, it is scary. I know, being involved in helping Calvin and formerly Enchain doing investing when we have to send investment funds and we like to invest by paying with Bitcoin. You're talking a decent chunk of money, and we always do a test transaction first of $1 or something like that to make sure you have the right wallet address. But then when you have to send the big amount, there's always that moment where, And
if they don't get it right away, if they're supposed to have gotten it and they don't have it, it's like you're on the edge of your seat for the rest of the afternoon.
Right. But, especially with BTC, with the slow confirmation times.
Yeah.
Okay, in our few remaining minutes, I thought I'd ask you, what are things that you see for the future of Bitcoin SV in with financial institutions? What do you think is the best opportunity that we as an entire group of people can be thinking about and engaging with financial institutions to discuss to pique their interest and get them involved?
I personally look at the opportunities where you have large flows of money. It's like a profit pool idea. What's the size of that profit pool? Is it significant? Is there a lot of money moving down that particular pool? Is the need high? Is it like a manufactured thing? You've just created this idea, or is there an actual need? And is the current friction and cost currently going through that particularly high, particularly expensive, etc.? So where you see those profit traps and profit pools, get busy. Get into there and don't design it, build it. Build it, try it out, because you're probably going to solve it the wrong way the first time around. But just try. So I think particularly find profit pools where you think there's money, go and get playing there.
Dave.
I think there's a massive opportunity in risk management and the linkage into auditability. Like one of the most spectacular parts about Bitcoin and SV in particular, the ability to have this very detailed audit trail, which when you really get this, we get the financial system operating on Bitcoin like this, the amount of fraud that can be either detected early or prevented completely, and then similarly like a more robust audit as a practice has the ability to completely revolutionize the way we actually account for the financial system. Like this can be a cataclysmic change in how that's done.
I'm glad you brought that up because I think that doesn't get enough attention in the Bitcoin world. The use of the Bitcoin blockchain for auditing and improving that. And it's probably because, it's not as sexy. It's kind of boring, the audit world, right? Sorry, any auditors out there. But it is such a huge potential use area for Bitcoin, and that is something that would make financial institutions a lot more comfortable in using its blockchain. Stefan.
Yeah, I mean, I've been going around this conference for the last like 36 hours, and even talking to Angus, clearly you guys are doing something right that's very well positioned for the financial services business, because I've spoken to several entrepreneurs there that says, we tried Ethereum, disaster. We tried BTC, too expensive, way too slow, and all that kind of stuff. And BSV works. So it's really the only option that we have for all the reasons that we're talking. And if these smaller use cases, right, if these other protocols can't solve these smaller use cases, even right now, can't get an app to work properly on Ethereum, it has no hope for the financial services business, because
needs scale.
This is
big scale.
It's like this is just, it puts everything else, makes it look like a mouse when you're talking to the size of transactions that these are doing. So from you guys, for your focus on scalability, it's perfect for the evolution in financial services.
Okay, well, that is a perfect note to end on. It's a real reminder of how it is time for Bitcoin to grow up, and to grow up in a way that will support as well as make comfortable the needs of financial institutions. So thank Angus, David Washburn, and Stefan Roulette for participating on this panel with me. Thank you.